Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to the live stream. So a lot going on with gold and silver. I wanted to start out with just the weekly chart here, just to put things in context for you. Note that silver ended the previous week in the green, okay? But it hasn't been without volatility. In fact, you can see here, silver ended the day on Friday down over 3%. Silver futures we're down over 4%. But again, just to put things into context, silver did end the week in the green. But we're going to talk about the possibility of a double top forming in silver here, kind of an ominous chart pattern, something I've been hearing a lot about recently on X. By the way, you can follow me over at X at x.com/stacksmarter. Been hearing a lot about this double top in the comments on this channel, so we'll delve into that and we'll get an idea for where silver may be headed by the end of 2025. In the realm of physical silver stacking, do have something to share with you here. Check this out. Introducing the first ever 5-ounce silver maple leaf coin from the Royal Canadian Mint. A historic release with an iconic design that is available in a stunning 5-ounce format for the first time ever. Don't miss your chance to own a piece of minting history. Available exclusively at sdbullion.com. All right, so that's pretty exciting. Very cool coin. Should have one of those to show off for you on the channel very soon. But now let's get into the silver chart. And we're going to cover a lot in today's live stream. Happy Sunday to everybody tuning in. Do me a favor, smash that like button. If you're not subscribed to the channel yet, do that. You know, a lot of people who watch the channel have not subscribed yet. So the idea here with a double top, let's go to Investopedia and see what they have to say about double tops. Here we go. So we do have the makings of a double top in silver. That is true. You see, you get this double top formation, just like what you see in silver here. Silver touched 54 and change. It corrected, touched it again. So far, it's corrected back. But that's not as bad as you might think from hearing about this double top, which is a classic topping pattern, because you really don't need to be alarmed about this until this neckline, which is formed by the lows of that intermediate correction between the two peaks, is crossed, right? So here you can see on this example from Investopedia, the support never gets tested at that neckline. When it does get tested here and it gets breached, that's what really kicks off the bear market phase of what follows the double top. So right now, silver is looking pretty good actually in terms of the double top. This would be the neckline. You might put this at the closing, the daily closes of the lows here. And we would have to penetrate that 46 bucks. Now, if silver does drop to 46 and then closes below it, below this yellow line, yeah, that means that we're probably in for a sharp correction. But to me, what this actually looks like, much more so, and it's a much more favorable pattern, is it looks like we're putting in an ascending triangle here. So part of the live streams is you get to see me struggle with TradingView's tools here to get these shapes in real time. But what we've got, to me, looks more like an ascending triangle. We touch 54, we correct, we touch it again, we correct. We'll probably touch this line again. That would be my forecast. Maybe sometime this week we'll touch it. Maybe not. I mean, maybe Monday's a blistering rally and we get back up here. But the double top thing is really kind of overblown here. And when you look at the fundamentals for silver and how bullish they are, and we'll get into some of those in just a moment here in this video, this seems to be what fits the bill here. And you'll notice where these lines kind of come together at the end of December, right? So it looks like this pattern will resolve itself by year end. And that means that we could see new record highs in the silver price before 2026. And I think 2026 is also going to be a very positive year for silver. Now, the ascending triangle, we've got that here from Investopedia. This is a bullish continuation pattern. And I mean, that so far is what we see, right? We see a flat top with a series of higher lows. Buyers are stepping in when we have corrections. And let's get into, hold on. Before we delve into some of these stories, I just want to show you this. This is talking about a record high price in silver. We actually have that on the Shanghai Gold Exchange right now. This is from the English version of the Shanghai Gold Exchange website. And I'm not sure which one of these is AM and PM because it's in Chinese, but the silver price touched 12,572 yuan. This is the most recent date is the 12th, so that was Wednesday. And if you do the math on that, that is the equivalent to $1,770.82. That's the conversion of that many yuan to US dollars. And then if you want to figure out the kilo price, because that's a kilo price, we'll just divide that by 32.15, so $55 per ounce. So in China, the silver price has already touched over $55, something we haven't seen in the US yet, but it's coming. This also kind of indicates to you who is buying the silver, and that would be the smart money, if you ask me, in the East. Now, I think Americans are going to start loading up on silver here eventually, but it's going to take a bit of a change. I think right now your average individual is actually selling physical because of the high prices. But, if you adjust these prices for inflation, they're nowhere near where previous bull markets went. Now, we did have a bit of a sell-off towards the end of the week here. You can see on Thursday and Friday, silver price was dropping after we had rallied back up to the previous high and touched it right in the mid $54 range. Well, why is that? Well, a lot of it has to do with the odds of a Federal Reserve rate cut in December, which have dropped significantly following some remarks from Fed officials. We had Boston Fed President Collins. She said on Wednesday that she supported cutting interest rates at the last policy meeting, but now the bar for cutting rates further is, quote, relatively high, and she sees holding rates at current levels for some time. And now you see the odds of a rate cut in December. It's basically just split. I mean, still slightly, actually less likely is that they're held the same, 55%, that the rates are not cut, whereas we've only got a 44% chance that we do get a cut. And you look just a month ago, that was an 88.2%. There was a 0% chance being priced in that the rates would be held where they are. There was actually an 11.5% anticipation, according to the FedWatch tool, of a 50 basis point rate cut. Now, this has sort of been, I think, the game for the Fed here is that they actually are in the process of easing policy, but they know inflation is rising as they do this, as they ease policy. They've already begun rate cuts. They're ending quantitative tightening. We'll talk a bit about that in a moment. But they're trying to downplay the inflation risk here, and they believe that the anticipation of future inflation is really the thing that determines where inflation will go, right? I mean, there is something to that, but the real problem with inflation is the constant printing of currency. It's not just where people think inflation is going to go. And so they're jawboning the markets. We did see some other corrective action towards the end of this week as well. We can look at things like Bitcoin. Look at Bitcoin, down to $94,000. So it wasn't just the gold and silver that have been correcting. It was also kind of a rough finish to the week for stock markets. So, not just in the gold and silver sector. In the gold and silver sector, actually, the mining stocks were somewhat more resilient than the price of gold and silver. But anyway, the Fed is kind of jawboning markets down here. They're worried about inflation, and that's why they're telling us one thing, but they are doing the other. You might recall that we had, let's see, where is this story? Oh, yeah. So we had a month ago, this was October 16th, signs of distress in the U.S. regional banking system. Zions Bank Corporation and Western Alliance Bancorp had a sharp correction there was concern about bad loans that they had made and bankruptcies. And it is really interesting that it was right around that time that we were seeing this weakness in the banking sector that Jerome Powell said that the end of the Fed's balance sheet drawdown process may be nearing, meaning an end to quantitative tightening, or QT. That is the Fed shrinking their balance sheet. And here we can see the Fed balance sheet, which, according to the most recent data from the Federal Reserve Bank of St. Louis here, is at $6.58 trillion, well above where it was prior to the COVID stimulus. You can see here in January 1st, 2020, Fed balance sheet $4.1 trillion. So they really haven't worked off much of the money creation that took place over the past 5 years. But now they're ending QT. And I mean, you can see why, right? Because the cracks are starting to show. We have problems with the regional banks. The U.S. national debt is at $3.82 trillion. If interest rates start to rise as we continue to issue massive amounts of new debt, that could be a huge problem. It could lead to a massive surge in debt service cost, which is already over $1.1 trillion, a record high. And that means that they're going to need to get back into the business of buying up assets like U.S. Treasuries to put a cap on interest rates. And so, you know, even though we've got some of these Fed presidents jawboning markets and we see it lead to a sell-off in gold and silver, what's really going on is that the fundamentals nothing's changed, right? Nothing has changed. Let's talk about gold, because gold also had sort of the same dynamic as silver. We had a bit of it topped back in October, and then we had a rally here, not quite to the previous highs. But again, this doesn't look like a double top to me. We had the same correction on Thursday and Friday that we had in silver. Looks much more like a triangle forming on gold's chart, just a consolidation. And, I also want to go back on this gold chart. So let's go way back. We're going to stay on the daily. But, gold was in this consolidation for a while where it was butting up against this level just under 2,100. It was kind of like near the previous all-time highs from the 2011 bull market. And it had to touch that level 1, 2, 3, false breakout above. And then, the fifth time, that's when we really launched into this pattern. And this was a breakout from a cup and handle pattern. Well, silver is kind of doing the same thing right now, right? Silver, you can see the cup and handle. You got to zoom out a lot more to see this because it's on a longer time frame, goes back to 1980. But this is the previous top from those bull markets, and we're in this huge cup and handle. And then if we switch it back to a daily, you can see that yellow line I just drew there. That's this one. So we broke through it, and we kind of retested it, fell through it, and then back above it, now kind of retesting it again. But it's not like you break out of a 40-year cup and handle pattern overnight, right? You might need to test that level. There might be some choppiness. There might be some consolidation around that level, just like what we're seeing right now. I don't think we're going to have to wait 4 years like we did with gold to see silver break out, with a vengeance above this level. And again, think about in inflation-adjusted terms. Yeah, in 1980, silver hit $50, but $50 in 1980 is not quite the same thing as it is in 2025. You'd have to see silver above $200 an ounce before you see something that equates to that previous 1980 high. So, silver is still very cheap here. The setup from a technical standpoint, when you look at that long-term chart, is very bullish. The setup for gold is also bullish, even though gold is already at record all-time high prices. You got this consolidation here. By the way, speaking of gold, gold's over $4,000 an ounce, kind of tough to stack. I'm not buying any 1-ounce gold coins, or if I do, I got to save up for a while to pick those up now. But you can always stack Goldbacks, and Goldbacks has a new design that just launched, the Arizona design. They're all available over at SD Bullion. Pretty nice designs too. They're really knocking it out of the park with these new series they're launching. And Goldback is really picking up the pace in terms of new states. But if you want to check those out, you can go over and check out all the artwork over at sdbullion.com. Still a very affordable way to stack gold because you can get it as low as 1/2000th of an ounce at a time with the half goldback note. Now, I want to talk a bit more about some of the fundamentals here, which are supporting a higher silver price moving forward. I mentioned, the Fed is returning to a policy of easing. They have already begun cutting rates, whether or not they cut rates in December. And, look, regardless of what the CME FedWatch tool says, it's mid-November. I would be shocked if we don't get a rate cut in December. It's going to be bad for markets, and there's going to be a huge amount of pressure from the president and from the executive branch, this administration, to cut rates. I'm not saying that's necessarily what's best for the economy. It means inflation is going to continue to skyrocket. But I'd be shocked if we don't get a rate cut in December. But they're doing this at a time when the money supply in the U.S. is at a record all-time high. And, we've looked at this chart many times because I think it bears repeating that there is a record amount of fiat currency circulating out there, and they are cutting rates, right? So the amount of fiat currency has never been greater in history. But it's not just in the U.S. This is from macromicro.me, and this is a chart of major central bank M2 money supply. So think of it as like the global M2 money supply. And it's not just dollars that are going to be chasing the supply of gold and silver. We talked about how in China, silver is hitting a record all-time high price. It's already put in a new high above $55 an ounce. Well, there's going to be a lot of renminbi chasing dollars. There's going to be a lot of euros, not chasing dollars. They're going to be chasing gold and silver. They're going to be dumping their dollars. So it's not only the dollars in the U.S. that are going to be chasing hard assets, right? It's going to be the trillions of dollars that are held abroad as the world de-dollarizes, and that trend accelerates as, they realize that we're cooked with the amount of debt that we have, and they're going to lose even more faith in the dollar, a trend that's been playing out for years now. We've talked about it extensively in previous videos. There's going to be a huge amount of fiat currency. There's never been more fiat currency than there is right now. And, this chart, I think, is going to start to accelerate to the upside. We're already seeing, I've got this stupid calculator I left up. Sorry about that. You guys got to let me know about this stuff in the chat. I do look at the chat sometimes. Sorry about having that big, ugly calculator there floating around for the past, 10 minutes? Now's a great time to break and say, hey, subscribe to the channel. If you like seeing live streams like this where I do things like leave giant screen size calculators up for you. But no, seriously, subscribe to the channel. It's something like 20% of viewers are actually subscribed. We're getting very close to 100,000 subscribers. That's going to be fun to get the silver play button. Definitely be showing that off, a new kind of silver to show on the channel. But please subscribe to the channel if you have not yet. So anyway, record amount of fiat currency chasing the same amount of gold and silver. In fact, it's a shrinking supply of silver. The amount of physical silver we know is in a deficit. And so the supply of silver is shrinking, the supply of fiat is expanding exponentially. And, a lot of the silver that exists out there, like when you see these drops, that's not because people are selling their silver coins. I do think people are selling their silver coins right now. And thank you to Jeff Tiger Tooley Thomas for the memberships you just put in the chat there. Always appreciate that. Gave some people some channel memberships, help support the channel. Thank you for that. So, when you see these drops, it's not because people are selling their silver coins. It's because they're selling futures contracts. This is a spot price. It's a paper derivative of silver, but still has a lot to do with how the physical stuff is priced. That is not a dynamic that is guaranteed to remain in effect, right? So if you're stacking, it's one thing to go out there and buy, silver stocks, and there's nothing wrong with that. I own silver mining stocks. I own some paper derivatives, but a lot of people own paper derivatives, right? The Saudi central bank owns tens of millions of dollars of the SIL ETF and the SLV ETF. But when you're stacking physical metal, you're in the minority, right? You're doing something special. You have an asset that is unique from just about every other asset in the sense that you have a monetary asset that is in your own possession. There's no counterparty risk. When the banks start to fail, you don't have to worry about your silver. You're never going to wake up one morning and, oh, your silver got bailed in, right? It doesn't work that way. That's why you want to have hard assets in your possession. Not financial advice, of course. I don't provide that, but this is how I think about these things. You really want to have the physical metal on hand. And also, this volatility, I think it is of interest to us as stackers, because if you're pursuing an approach like I am, where you're dollar cost averaging, you can, buy the dips. Like now, we're in a dip. It's probably a good time to acquire some silver. Just saying, not financial advice, but I like to look at the charts as a stacker. But if you're speculating on some of the derivatives because you like to keep an eye on these markets and you understand the silver narrative, when you buy like the silver stocks, for example, it's a little different than just buying a share of the SLV. You're getting silver in the ground. It's a lot more speculative, a lot more risky, of course, than holding physical metal assets. But just about any paper asset out there has its own risks. You could have your bank account, and your bank account, as we see, there are problems in the banking sector, never really fixed. We had the big the spike up in the Fed balance sheet in the March 2023 banking crisis. But like one thing you can guarantee with the bank account is you're probably going to get your deposit out, right? Because it's FDIC insured and the Fed's got your back. But the risk there is that in order to make you whole in the event of a banking crisis, they have to print all the money. So you're going to be made whole in a debased currency. So there's always risks, whether it's silver mining stocks or money in a checking account or a saving account, right? Even money in a savings account, yeah, you're going to get the interest. Yeah, you're going to be made whole if there's a bank failure up to whatever the FDIC limit is. But what's the purchasing power of that currency going to be? So, I mean, even being in cash is a decision that you have to make here, and it brings with its own risks. But anyway, that's my take on the recent action in the gold and silver market. I really don't see a double top forming here. It looks more to me like we're just consolidating sideways, and that's pretty normal if you look at how silver moved up. I mean, look at the slope of the advance, right? Look how steep that is. If you look at any of the indicators, like if we look at the relative strength index here, I mean, silver hadn't been this overbought, I think, since 2020. The recovery from that $12 low, we had this huge run up, right? You go from 11 and change to almost $30 in a couple months, and you get as overbought as we just were. So silver is going to need to work off some of this overbought condition. I think it's doing a pretty good job of that right now. If it concerns you to see the silver price drop by, what did it drop? 3.5%. You're probably kind of new to the silver market. It's an inherently volatile market, more so than gold, more so than the stock market. Silver is a tiny market. It's very volatile. And one of the most compelling things about stacking, I think, is just how volatile the silver market is, because that volatility works, to the downside, but also to the upside. And then if you think about how small the paper silver market is, think about how small the retail physical market is, like 1 ounce coins, junk silver, that kind of stuff. It's really a tiny, tiny market. And that's why it's, in my opinion, it's just my opinion, right? But that's why I view it as an excellent asset to hold, because when demand for it picks up, and it can pick up in a really big way really quickly, we've seen examples of that in recent history, there's not enough of it to go around. So you really want to get it in, quote unquote, normal times. It's hard to say that anything about our economy is normal right now, but it's going to get a lot worse, I think, before it gets better. All you have to look at is, you don't have to overthink it too much. Look at the debt, look at the money supply, look at the Fed balance sheet, look at what the Fed's doing. They're cutting, they're ending QT. Yeah, maybe they don't cut 25 basis points in December. Okay. I mean, they're going to in January then, right? They're going to in March. They're going to continue cutting. They're not going to raise rates. They would crash the markets. if they did that. So it doesn't really matter how long it takes for them to cut. They're already in accommodative territory. And you know that as soon as push comes to shove and any kind of crisis starts brewing in the markets, you know what their reaction is going to be. So yeah, silver's going to be volatile along the way. That's good if you're a trader and you can figure that out, I guess. It's also risky to be trying to trade it in the short term. You can lose a lot of money that way. But it's nice for stackers because it doesn't go up in a straight line. I'm sure that there were those of you at $54 who were thinking, man, I wish I could have gotten some. And then look, a couple weeks later, you could buy it at 47. And now back up to 54, right? That's different from previous bull markets. We went over 50 twice. I think that alone is a sign that this time is in fact different from 2011 and 1980 because the silver price in those markets just touched 50 and crashed from there, or corrected from there, and that was it. Now we're back. We're actually back over 50. The fact that silver was able to close the week above 50 is a pretty big deal, right? That's only I think that's only the second time in history that that's happened. No, third time. Sorry. Closed the week of October 6th, the week of October 13th, and now this past week above $50. So that's 3 weeks now in the bags. In the modern fiat era where silver has closed above $50 an ounce. But it's the first time that it's ever done that. Historically, in neither of the previous bull markets did we get a weekly close above 50. So, all signs are very positive for silver here. Anyway, that's why I'm still stacking. Leave me a comment down below to let me know what you think about this silver market. Double top, not a double top. Would love to hear your take. And stay safe, everybody. Happy stacking. I will